Hey traders, welcome back to the channel. If you're glued to your screens right now, you're probably feeling that pre-FOMC buzz. Today, we're diving into the wild history of FOMC chaos, why your go-to strategies might leave you burned, and why this upcoming announcement could unleash total market madness. Buckle up, this is gonna be a ride. Are you tired of your portfolio getting absolutely hammered every time the Fed speaks? Those FOMC shocks can wipe out months of gains in minutes. What if I told you there's a way to not just survive these volatile moments, but actually thrive using an AI-powered secret weapon? This is the first of 5 video series I will make for you to get exponential benefits and get that dream of a crypto millionaire come true. So let's get locked and loaded. First, let's recap the historical insanity. Picture this: December 2015. The Fed finally hikes rates after years of zero-bound limbo. Markets, they tanked hard. S&P dropped 5% in days amid panic selling, or flashed to 2018's rate hike frenzy. Jerome Powell signals more hikes, and boom, December bloodbath. The Dow plunged 552 points in one session, erasing billions. Quantitative tightening? Oh man, 2019 saw the Fed forced to pause QT after repo market seizures and liquidity crunches threatened the whole system. Remember March 2020? Emergency cuts amid COVID chaos, flipping from hikes to zero in weeks. Stocks whipsawed 10 to 20% swings per announcement. And don't get me started on 2022's inflation war. Powell hammers 75 basis point mega hikes, bonds crater, yields spike to 5%, crypto implodes. Every dot plot twist, every forward guidance shift? Pure uncertainty. Traders bet wrong, leverage positions blew up, and vol exploded to levels not seen since the GFC. These weren't gentle nudges, they were earthquakes reshaping portfolios overnight. Why do traditional strategies flop here? Here's the brutal truth. Most rely on patterns, technicals, or macro models assuming predictability. But FOMC? It's a black swan factory. Rate paths shift on whispers. Dovish minutes 1 week. Hawkish Powell speech the next. Straddles and iron condors. They bleed premium pre-announcement, then gap through on surprises. Momentum chasers buy the dip, crushed by reversals. Even fundamentals like CPI or jobs data get overridden by Fed psychology. Models backtest beautifully on past hikes, but forward guidance is a mind game. Powell says higher for longer, markets price soft landing, one recession hint, and it's risk-off Armageddon. Algo HFTs amplify it, front-running each other into flash crashes. Entail TA, useless against policy pivots. You can't chart, will they QT or not? It's asymmetric info warfare. Insiders leak vibes, headlines flip narratives in seconds. Strategies assuming normal volume die. You need adaptive, low-leverage plays that survive the fog. Now, the teaser you've been waiting for. This FOMC drop is primed for fireworks. Markets are razor-thin on cuts, but whispers of sticky inflation and hot jobs could slam that narrative. QT unwind? Bond vigilantes are circling. Vols creeping up. VIX at 20, implied moves screaming 1 to 2%. S&P swings post-announcement. Will Powell pivot or double down? One dot plot dot shifted. And we're talking trillions in repricing. Position light. Eyes wide. Volatility's coming, and it could make or break Q1. What's your trade? Drop it below. This is an educational video and not a financial advice. Episode 2 with more updates coming soon. Smash like if you're ready, subscribe and share. See ya ahein.